All right, guys. What's going on, tycoons? We are going to go over the studies that I like to use and when I'm day trading, okay? What indicators that I use and why I use them and how to set them up and also, why they're useful and why I like them, okay? So what you're going to want to do is you're going to want to go to your studies, edit studies, all right? And I have the exponential moving average on here twice. So what you're going to need to do is go over to your left and type in expo, and then it'll pull up moving average exponential. And you want to click that and hit add selected twice. Okay, you want it in there twice. All right, and then you're going to go to your settings and you're going to change the color to yellow. That's the color that I like to use personally. Feel free to make it your own. And then we have the 9. Okay, so I like to use the 9 EMA as yellow. And then I make the other EMA the 21 EMA. So I change the number to 21 and I change the color to orange on that one. And then VWAP, okay, I have the VWAP on there. That's VWAP, all right, volume weighted average price. I keep that one the same, except for the upper band. I select show plot, I turn that off. So I don't have the upper band or the lower band showing. Okay, I just have the middle VWAP band basically on there with the 9 EMA and 21 EMA. Then I also have the volume average. You basically just type in volume average. Everything's default on that one. And then I have the RSI on here as well with default settings as well. All right. Um, so let's go ahead and dive into it. So if you're looking at the chart, basically the purple is the VWAP. And so that's going to be your base, basically. All right. So when you're above VWAP, bullish. When you're below VWAP, bearish. All right. And your EMAs are going to help you kind of, judge and help just give you a little bit of visual touch if you're having trouble reading kind of, where things are pulling back and bouncing to. All right. So if you notice here, we came back down, we bounced at the VWAP. That's what's known as a VWAP bounce. Okay, so we bounced at the VWAP. All right, we have our yellow EMA cross above the orange EMA. So that's our 9-day EMA crossing the 21-day EMA, which is a bullish indicator. All right, so it crosses, there's been a run up, it crosses, we reach a high right here, we come back down, we bounce again off of VWAP, we can go again. And if you notice, we're basically kind of using our 9-day EMA as support. And when we break that level as support, we keep bouncing off the VWAP. So that's a good bullish indicator. All right. Like right here, we bounce off the VWAP. Okay. We bounce off the SMA here, bounce off the VWAP, bounce off the SMA, bounce off the SMA, and it's hugging this. So as long as we are holding the 9-day SMA as a support level, you're good to hold a bullish position. All right, so if you would have entered here off the VWAP bounce and you see we have a red candle here, you can feel confident because we're still finding support at the EMA right here. But once we're up here, we have multiple red candles. We're holding a support, holding a support. Things are looking good. We could reverse here and keep going up, but no. Instead, we find support at the orange EMA, not the yellow EMA. And then we break support at the orange EMA. We come over, and now our yellow EMA has crossed the orange EMA. So whatever direction that the yellow crosses, either the EMA or the VWAP in, is going to be an indicator that that's where the price trend is going. And you want to stick with the trend to be able to spot the trend. All right, so, okay, boom, this uptrend is over. All right, we now see that the yellow EMA is crossing the orange, and now it just crossed the VWAP here. So price action was above the yellow and orange and purple lines we have here. Now, price action has crossed all three, the orange, yellow, and purple, and we're starting a downtrend. And now if you notice, instead of being a support level, our 9 EMA is acting as a resistance level. So we're going to drop hard, and then, yeah, it might pull back up here, but it'll find resistance against the 9 EMA and keep dropping. And then, boom, we come back up here, keep dropping, boom, come up here. It's holding support. We break through, we use the orange EMA as support. I'm sorry, as resistance. Okay, so it works really, really well, and it continues to work. All right, so let's zoom back in. So boom, coming back up, use the orange as resistance, and now we're back down, back down, back down, use the yellow as resistance, back down, and then we hit this demand zone, where eventually we ended up reversing, and then the yellow EMA crossed above the purple VWAP and the orange line. All right, and as you can see, we ended up running up higher. Okay, so it's very useful on small time frame charts, on the 5-minute chart and the 1-minute chart, to help you kind of spot trends and possible trend reversals. Okay, so like right here, you could have thought that this was just a big dip and bought this dip and expected this thing to recover and keep going higher. But if you're looking at the 5-day, 5-minute chart and you have these EMAs pulled up, you would have seen, okay, no, we had the yellow EMA, our 9 EMA crossed the 21 and crossed the VWAP. So that's an indicator that it's about to start a bearish trend. Let me wait it out or get a short position and see if we can ride this, possible bearish trend. Okay, so that's how I want everybody to do it, basically, and to just keep an eye out for it. These work really well. This isn't the only thing I would use. I would learn the supply and demand zones, which are these, red and green boxes that I have in here. I would learn how to do those. And once you combine that with a couple strategies, okay, so now you have how to use the EMAs and the VWAP on a small time frame. You know how to read the RSI a little bit. Now you have supply and demand zones, so things will start to make sense a little bit more. And if you notice, in each one of these demand zones, we did pull back, we did come back up. So there was some demand in these demand zones. All right, and now we're bouncing on top of this demand zone right here. So it's just something nice to keep in mind of. Okay, like basically, all right, we had this demand zone, we came up into it. This was a supply zone originally, so this was like a sell-off area where we could see a sell-off. We came up a little bit past it, and then we dropped through it, and then but yeah. So, anyways, hopefully you guys like this video. Hopefully it's making sense to you guys, and I really do use these indicators every day. We trade options on the SPY every day and the SPX every day, and we get anywhere from 20% to 100% to 1,000%, almost every day, trading options using these strategies and these indicators. So if you guys want to be a part of that, you can always join the Options Trading Tycoons Discord. You can join us in our trades, you can join us in our analysis, or just gain access to all of the free resources in there that come along with the membership. The link to join will be in the description below. Okay.